Uh, almost 100% of it was adaptation. I didn't ever intend to build anything. I
Mm.
enjoyed building things. It was fun. It was thrilling. But when I got into the multifamily world, it was, I wanted it to be like everybody else, do value adds. But then what I started noticing was, as the years went by, our company was sold in 2013, so that's when I sort of became active. I was doing real estate since 2008, and I'll tell you that story, my kind of personal story of how I, migrated on the personal side. But
Please.
beyond 2013 is when I got active in the syndication world. And my goal was just to do more syndications. But by 17, 18, 2019, value adds were becoming so expensive that people were buying 50-year-old property at $100,000 a door, where in the same market, tertiary market, you could build a new build for $130,000 a door. So why would I give up on all that value that I created just for $30,000 a door? Why would I give up the immense value? I mean, when you do value add, 90% of that is lipstick. Countertops and cabinetry. You're adding value, but that value is usually worth $150 to $200 a month in rent.
Yeah.
When you build something from dirt, you're going from $0 to $1,800 in rent, right? So the value that you're creating is massive. And if the difference is going to be $100,000 a unit on the old stuff and $130,000 on the new stuff, it's
It,
clear. Most other people didn't have that choice because they don't know how to build. So you have all these old properties in the United States that were built in the 70s and 80s. That was kind of boom time for apartments before they started clamping down on zoning, right? So there were apartment complexes mushrooming everywhere in the United States from the beginning of the 70s to the end of the 80s. After that, zoning basically started slowing everything down. And these apartment complexes haven't been upgraded in a very long time, right? So they still have the original countertops. They still have the original in many cases, they still have the original carpeting, which is disgusting, right? 30 years of rentals or more. And so there's this industry in the United States which buys these and then does a cosmetic lipstick on a pig upgrade, right? So you're putting a lot of good lipstick and maybe a little bit of rouge and a little bit of mascara on this pig, and now it looks like a much nicer pig. And you're renting out these units about, let's say, I'm going to just round this up, $200 a month more. And you might say, how much value could you be creating for your investors if you're renting it out for $200 a month more? Well, follow the math here. I'll try to make it as simple. I've got a 200 unit apartment complex. And out of those 200, let's assume for a moment that it's 100% full. Generally,
yeah.
they're about 95% full, but we're going to
Yeah.
assume 100. So you got 200 units and you've added $200 a month. Well, 200 by 200 is 40,000 a month. Multiply by 12 months, you've added $480,000 a year of value. Now typically we hold for 5 years. So I'm going to take that 480,000, I'm going to multiply it by 5 years. And now I've added $2.4 million worth of cash flow. That's brand new cash flow. And you might say, wow, 2.4 million sounds like a lot, but don't you have like $5 million worth of investment from your investors? The answer is yeah. But if somebody gave, let's say we had one investor and he gave us $5 million and we gave him $2.4 million back, well, that's almost a 50% return just in cash flow in 5 years. That's pretty good. That's pretty decent. And, obviously in a world of 0% interest rates, you want to be at 10% cash flow. But the good news is actually on the back end. There's this magic of multifamily, which says that for every one new dollar of income that you'll create, when you sell the property, someone will pay you $16 to $17 for it. And in large metros like San Francisco Bay Area, they'll pay you $25 for it. But I'll use the standard example in the US, which is you'll get $17 for it. So remember, I had generated in a year. So you have to, it's a multiple of the year. So I can't use the $2.4 million number. I'm going to go back to my annual gain, which is $480,000. So I did all this hard work. I generated $480,000 every year. Now I'm going to multiply that by 17. And that ends up to almost $8 million. Now, before you jump up and down and say, oh my God, as an investor, I'm going to make 8 million. No. Well, there's the portion that I take, right? So me and my many partners, this is a team sport. So think of us as a soccer team that's working on your property, right? Well, we take about $3 million. And then there's selling costs, there's buying costs, there's holding costs, there's loan fees. So it's probably likely that you as an investor, remember that one superstar investor that gave us $5 million, that there's going to be $3 to $4 million additional that are coming on top of this. And in the US, those dollars are very prized because they fall under a tax category called capital gains. And so this investor is not only making money, he's not paying 39% federal tax, he's paying 15%. And that is extraordinarily prized in the US, even though our taxation levels are slightly lower than Europe where you are, it's still very prized. So investors absolutely adore what we do with value adds, right? Now we flip the paradigm and say, what about new construction? Well, with new construction, what we're doing is we're building it from scratch, right? So our cost of per door is higher. So it might be $130,000 a unit, but because we're building more value, the returns are higher. So if you take any random 20 value add projects, and then you take any random new construction projects, you'll notice that new construction projects, the profits are higher. Not like 2x or 3x, but they're 40, 50, 60% higher. And so blending the two projects together is something that's been a passion for me. I know that this is something that's unique to our company. I don't know how long it's going to stay unique because a lot of people are noticing what we're doing. But it allows us to do some phenomenal things with it. But, going back to the beginning of the story, how do you get so many investors to be able to, buy hundreds of millions of dollars? And I think that's the part of my story that is more interesting because, the mad scientist moniker really came from me developing some systems and tools and giving them away Wikipedia style. So we can talk about that if you feel it's. So every time I see a way to add value, I jump in. So in the last 6 months, we've done 6 COVID town halls, and each one of these 6 had a theme. So there was a student housing theme, there was an industrial theme, there was a multifamily theme, a single family theme, where we basically bring in top rated experts. We do our own research. So we present our research and then we open it up to panelists. More than 1,000 investors have watched every one of our 6 town halls.
Wow.
I think that's the best way to give value because these town halls, we have an absolute ban on anyone discussing anything other than the topic. So you can't even say something like, I do multifamily or I have syndications. You can't say anything. It's just, you came in, you got what you want and you got out. And what's interesting is when I say that to some of these experts, they don't want to show up because they want to go and pitch a product. And I'm saying true value means true value. There's no half-assed true value. It's just true value. You're in there and people will Google you. They'll learn more about you. You just can't tell them, about yourself. And what's interesting is over time, I've realized that there's many people out there who love the concept of true values. They're like, oh, I'm happy to give you an hour of my time. I'll share with you what I know. And we have built an ecosystem of those people that believe in the concept of true value. We've created partnerships with them and we've created projects with them. And then people come back and say, I listened to this guy a year ago talk about industrial. Now that Neil has a project with him, I'm going to go and execute on that project. Similar things. We are doing in about 10 days a session about the impact of the election, the US election on real estate. And we expect that we will have to repeat the session 3 times because our Zoom license, which is 500 people, is going to go in like seconds, right? Because everyone wants to know what that impact of the election is. And we've broken it down into 1031, capital gains, new construction, opportunity zones. What are all the different things that are going to get affected, right? Regardless of whether Republicans or Democrats come in. Then we've got a new series that's coming up that I'm super passionate about. It is a 6-part series about the absolutely world-changing impact of climate change on real estate. So there's a lot of people that are Republicans listening to this saying climate change doesn't exist. My feedback is this: no, it's not climate change that doesn't exist. Your argument, if you're a Republican and you think your climate change denier, is that climate change is not caused by humans. So first get your argument right? No one's saying climate change doesn't exist. They're saying climate change is not caused by humans, it's caused by the earth. Fine. So what I've done is I've created this 6-step program. It's 6 different webinars that assumes that climate change could be because of natural causes. So let's not even get into the conversation of whether it's caused by humans or not. I'm simply talking about, okay, regardless of who caused it, This is going to massively, in a way that has never been seen before in history, disrupt real estate, right? Let's talk about what that disruption is, because it is going to create the greatest single opportunity for real estate wealth that you will see in your lifetime. The last time an opportunity like this came in, it was called the gold rush, and it was in the 1800s. Nothing like that has happened since. So because this is a land grab, because certain portions of land in the United States will just simply vanish, right? And it'll vanish much sooner than you think, because no one will insure it anymore. So the land will still be there. The sea wouldn't have come in, but nobody would want to live there because nobody would insure it. So those sorts of things really make me passionate, because this is information that most people don't know, but it's so powerful, so disruptive, that it should be out there.